All right, so check this out. You sent us this video all about Forex trading, and this guy is going on and on about predicting the market.
Oh, really?
Like he's got some kind of crystal ball. It's wild.
Oh,
Inner circle trader, that's what he calls himself.
hmm.
Bold move, right?
Yeah. So what do you think about this whole predicting the future of money thing?
I don't know, man. It's a little out there.
It definitely grabs your attention, doesn't it?
For sure.
The idea that you can somehow outsmart the market, it's really appealing to people.
Oh, yeah.
But I think whenever someone's promising you the keys to the kingdom when it comes to trading,
Yeah.
a little bit of skepticism is a good thing.
Right. Like put on your skeptical hat for a minute because this guy, he's really going all in on this model he's come up with.
Okay.
And he's using the euro and the US dollar as his big example.
Yeah.
He's got charts, lines, arrows, you name it.
The whole shebang.
The whole shebang. But then he starts throwing around these terms like liquidity pools and buy-sell stops.
Right.
And honestly, it's making my head spin. I don't know about you.
Sure.
Can you maybe help us break this down a little bit?
Absolutely.
Yeah.
Let's start with those terms you just mentioned.
Okay.
Liquidity pool. Think of it like a popular fishing spot, okay?
Right.
You've got a lake, you've got a bunch of fishermen,
Okay.
and there's one spot where all the fish seem to be biting.
Right? Lots of fish.
Lots of fish, or in this case, lots of buy and sell orders,
Yeah.
all concentrated in one area.
Okay.
And these usually form around certain price points
Yeah.
where traders think, okay, the euro, for example, is either a steal right now or it's way overpriced.
So it's like a feeding frenzy, but for currencies.
It's exactly a feeding frenzy for currencies. That's a great way to put it.
Okay.
Now, let's say some of those fishermen, they've set up nets at specific depths.
Okay.
Those are your buy-sell stops. They're like pre-programmed orders that say, if the euro sinks to this price, buy it up. Or if it shoots up to this price, sell it off.
Interesting.
They're trying to capitalize on those price swings, those changes in the market.
So this trader is basically saying that if you can figure out where these liquidity pools and these buy-sell stops are, you can kind of predict where the price of a currency pair like the euro USD is going to go.
That's the gist of his argument.
Yeah.
He claims to have basically decoded the matrix of the Forex market.
Hold on. Did he just compare Forex trading to the Matrix?
He did. He did.
Okay.
But, we should probably mention here,
Yeah.
while algorithms, they do play a big role in Forex trading.
Right.
Proving that there's some sort of intentional manipulation happening, it's incredibly difficult.
Right. It's a global market.
Exactly. We're talking about trillions of dollars changing hands every single day.
Okay, so maybe not quite like the Matrix, but still
Still high stakes.
high stakes, lots of players.
Yeah.
And speaking of high stakes, he keeps mentioning this New York open kill zone,
Yeah.
which sounds kind of ominous if you ask me. Is
Yeah.
that like a real thing?
It's true that the New York trading session, which kind of overlaps with the London session, that's usually one of the most active periods in the Forex market.
Okay, so that's when things really start buzzing.
Exactly. And more activity can lead to bigger price swings, which some traders love.
So more fish in the sea, or in this case, more euros and dollars sloshing around?
Precisely more euros and dollars sloshing around.
But
the idea that there's this specific kill zone where everybody's just out for blood,
right.
it's a bit of an exaggeration.
Okay.
The market, it doesn't really care what time zone you're in.
Right.
It's always moving, always shifting. It's
Yes.
not playing favorites.
So is he onto something with this whole New York open thing, or is it just hype?
I think a good way to think about it is this. Knowing when a store is having a big sale is useful, right?
Sure.
But it doesn't guarantee you're going to get the best deals.
Right.
You still need to know what you're looking for, how much you're willing to spend, and you've got to be prepared for some serious competition from other shoppers.
And in this market, the competition is fierce.
Oh, absolutely.
We're talking about seasoned traders, massive institutions, and let's not forget those algorithms we talked about.
Exactly. And that's where I think his model starts to feel a little too simple.
Okay. How so?
Well, he's suggesting that you can use these liquidity pools and these buy-sell stops to just know exactly how the market will react.
Yeah, during these really busy periods.
Right. But even with all the fancy algorithms and analysis in the world, the market has a way of doing its own thing.
So it's not that simple.
It's not that simple.
Right.
No, it's less like cracking a safe and more like trying to predict the weather.
Okay.
You can identify some patterns, but there are always surprises.
You're listening to The Deep Dive. We'll be right back after this quick break.
So he's got these big ideas about predicting the market, but then he starts talking about risk management.
Right.
It's like he's handing you a sword, but then he's also giving you a shield at the same time.
And a good defense.
Exactly.
That's how you stay in the game. especially in Forex, where things can change so
Oh,
fast.
yeah, it's a fast-moving market.
He mentions this thing called risk-reward ratio.
Right.
What is that?
So think about it like placing a bet, okay? The risk is how much you're willing to lose if you're wrong.
Right.
And the reward is how much you could potentially
Yeah.
win if you're right.
Okay.
You want that reward to be a lot bigger than the risk you're taking.
So it's not about winning every single trade. It's about making sure the wins are bigger than the losses.
Exactly. You got it.
Okay.
And that's where those stop-loss orders come in.
Right.
It's like a safety net for your trades.
Okay. How so?
Let's say the market moves against you and your euro. Well, it starts to drop like a rock.
Oh.
That stop-loss order, it'll automatically sell it off at a certain point, so you're not losing your shirt.
So you're limiting those losses.
Exactly. Limiting the damage. It's like having insurance for your trades.
Okay, that makes sense.
It's not about being pessimistic. It's just being realistic.
Right.
The market is unpredictable. Even the best traders in the world, they get caught out sometimes.
And he actually uses a specific trading day as an example.
Yeah.
He shows how his model would have made money.
Right.
Is he being legit here, or is this like a sales tactic?
Well, this is where you got to put on your critical thinking cap.
Right.
Remember, he's showing us all this in hindsight.
Right.
It's easy to look back and say, see, I told you so, when you already know what happened.
It's like watching a horse race after it's over.
Exactly. Anyone can pick a winner when they already know who won.
Right.
But trading in real time, it's a whole different ballgame.
Yeah, you got emotions,
Yeah.
you got fear.
Exactly. You got fear, you got uncertainty. You might miss out on a big opportunity.
It's a lot of pressure.
It is. And this inner circle trader, he's playing into those emotions.
Right.
He's dangling that carrot of easy money.
He even uses this term, the Judas swing.
Yeah.
What,
Well,
it's some kind of Forex betrayal?
sounds kind of dramatic, doesn't it?
It does.
Basically, he's talking about a small, deceptive price movement.
Okay.
It goes against the trend, but then it signals a much bigger move in the opposite direction.
So it's like a fake out?
Exactly, a head fake, like in basketball.
Okay.
He's saying these Judas swings are predictable.
And you can use them to make a ton of money.
That's what he wants you to believe. But in reality, identifying those swings consistently is really hard.
So it's not as easy as he's making it sound.
Not even close. It's like trying to predict which way a leaf is going to blow in the wind.
Okay, so he's definitely hyping it up a bit.
A bit, yeah.
But is there anything about his approach that's actually legit?
You know what? He's not entirely wrong about everything.
Okay.
Some of the stuff he talks about, like identifying those market-moving events,
Right.
those are actually solid trading principles.
So it's not all smoke and mirrors.
Not all of it. No, think of it like this.
Okay.
He's taken some accurate pieces of a puzzle,
Okay.
but he's put them together in a way that fits his narrative.
And his narrative is, join my inner circle and I'll make you rich.
Exactly.
Right.
And while there's nothing wrong with offering trading education or insights,
Right.
be careful of anyone who says they have a foolproof system.
Because there's no such thing.
Exactly. There's no
Right.
guarantees in trading.
So you shared this video with us. What are you hoping people get out of this deep dive?
That's the million-dollar question, isn't it?
It is.
I think it's important to be critical of this kind of information.
Okay.
Does it feel right to you? Does it match up with your risk tolerance and your investment goals?
So you got to ask yourself.
You got to ask yourself, am I willing to bet my hard-earned money on this?
Yeah, that's the real question.
That's the deep dive right there.
So it's kind of like he's giving us just a taste, right?
Yeah,
There might be something there, but you don't want to go all in based on just this one video.
exactly. It's a starting point.
Right.
It's got you thinking about some important stuff.
Like what?
Like, is there really this, like, secret club of Forex traders who are just, like, rolling in cash?
Right. Are we missing out on the secret handshake or something?
Probably not.
Yeah.
But there are definitely people and companies out there with way more experience
Oh, yeah, for sure.
and more resources than the average trader.
Okay, so what can you do then?
I think the most important thing is to focus on what you can control.
Okay.
Your knowledge, your strategy, and how you manage your risk.
Because he makes it sound like anyone can just learn this model and start making money hand over fist.
Yeah, and that's what's so tempting, right?
Right.
We all want those shortcuts. We want things to be easy.
Sure.
But the reality is consistency in trading, whether it's Forex or anything else, it takes time. It takes work.
Yeah, you got to put in the effort.
And you have to be willing to learn from your mistakes when things go wrong.
It's like anything else you try to learn, right?
Exactly.
Like you don't just pick up a guitar and suddenly you're Jimi Hendrix.
Exactly. You got to practice, you got to be disciplined, and you need a lot of patience.
And even then.
Even then, there's always something new to learn, some new challenge.
So if you had to give just one piece of advice to someone who watched this video and is now thinking about diving into Forex, what would it be?
Don't believe the hype.
Okay.
Be curious about Forex, but be skeptical too.
Okay.
Learn the basics, have a solid plan for managing your
Yeah,
risk.
don't go broke trying to get rich quick.
Exactly, and remember, there are no shortcuts.
That's good advice for just about anything in life, I think.
It truly is.
Well, that about wraps it up for this deep dive into Forex trading.
Yeah.
We've heard some bold claims, explored some interesting ideas.
We dove into the liquidity pool.
We dove right in, and hopefully you listening now have a better understanding of this market.
It's a wild ride out there.
It is, so do your research, be careful, and never invest more than you can afford to lose.
That's the golden rule.
That's it for this episode of The Deep Dive. Thanks for listening.
See you next time.